Well, good afternoon and market roundup time. Joe with you here. It's the 2nd of September. I hope you guys had a good extended holiday. I know I did. I wish it was longer. You guys know how this works. Make sure you take responsibility for what you get from all of our courses. Let's take a look at the meaningful news of the day and look at some stuff technically. And I've got a couple of trades to share, so we're going to go ahead and do that.
All trades and analysis in this video are for professional traders only. This video has been released to the public after a delay required by our compliance department. Maverick traders receive this market recap immediately, along with real-time trading support and resources. Maverick Trading is a proprietary trading firm that backs professional stock and options traders with firm capital. Our traders keep 70 to 80% of the profits they generate. If you're ready to become a professional trader, click the apply link in the video description below. Let's break down what happened in the markets today.
Moving into the market analysis, coming out of a holiday weekend can prove a little bit difficult, but it looks like we just slid a little bit. So straight up into the daily news, the markets did gap lower. We did see a little bit of weakness in Friday. I do think the PCE number might have shaken some stability, thinking, okay, we could see a slowdown coming. We're not sure where it's going to go when it comes to interest rates, but it seemed to carry over out of the weekend, and this tends to happen. Think about it psychologically. Any trader that, oh geez, I should have sold on Friday and I didn't, they have to build that up on a Saturday and a Sunday and a Monday, and when Tuesday comes, you usually get a pretty good volatile reaction, and it did. It gapped a little bit. Now, we did close off of the session lows. We'll take a look at the candlestick here because it was actually a little bit more of a reversal signal, but it's a little too early to tell. It's very difficult to do a class coming out of a holiday weekend because it takes at least 2, 3, 4 days before you can actually see if sentiment has truly changed. However, there's no real change to the overall trend with today's action. Once again, I'll show you the candlestick here. So how do we finish? Well, down 0.5% on the Dow, the S&P about 0.7, about 0.75%. The Q is just shy of 1%. Obviously, a little bit more coming out of some of the darling stocks there. We'll take a look at the heat map here. Russell's down about 0.5%. And then a little bit of risk aversity, meaning let's get back a little bit of a bounce in oil and gold. A lot of that could have carried over through the weekend when it comes to futures trading. But at just a glance at this, it looks like just kind of a healthy pullback when it comes to some of the equity markets and a little bit of a flight to some safety when it comes to oil and gold. Let's go to the advanced decline line. You can see definitely more declining than advancing, and above below the 50-day moving average, still leaning towards that glass half full. Just some bigger moves to the downside when it comes to gaps. But like I say, folks, you'll see here in a second, the markets retraced the majority of it, and so did a lot of these other stocks. Still a down day, but not as scary as one might think. So let's just jump straight into it, and you can see there it is. This is actually a bullish hammer stick candle. So you can see we were all the way down here at one point. The gap following through with what we had on Friday. I mean, folks, on that we actually did break into new highs a couple of times in August. But here we are, a little bit of a hammer. It is slightly below the 20-day moving average, but to me, it's more of a deeper pullback. It feels like something that we've seen in the past. Now, the follow-through is what's going to be really big. Do we start to chomp around, and do we have to deal with a consolidation area here for a minute? Or are we just going to have an opportunity for buyers to come in and push this market right back up? Now, based on some of the moves that I saw, at least intraday, there was some buying coming off the bottom there. But not like we've seen in the past, not like we had when Powell came out on that Jackson Hole announcement. But these markets could be tired here at the top. But we also have a couple of other things to kind of kick around that might be kind of a catalyst to what's going on here. Let's go over to the Qs, and I'll kind of elaborate. Expectations of, hey, August is usually, kind of bullish coming out of the summer. September is going to correct some stuff. Statistically, September, October, there's a lot of weakness in those 2 months. There's a whole bunch of stuff to, create at least some turmoil. I mean, it was a pretty decent amount of volume here on the Qs. But once again, comfortably off of the bottom, not massive. It's not like it went all the way back up to positive territory, but comfortably off the bottom. Definitely a little bit deeper of a pullback on the Qs than the S&P, as we're off of the 50-day versus just below the 20 on the SPY. And we do kind of have a slight decrease here. So maybe the Qs have, has a little bit more to go. But if it can stay within a range, if it can stay within, its support resistance level, it can bounce around here and still not be really deemed as bearish or selling off. So we got to be mindful of that. there's a lot of stuff out there that can really shake the trees and really change traders' minds based on the reaction to the impact and volatility and response. But it's the true sentiment. It's where it goes. I mean, if this is established as a support level, I mean, it doesn't matter what doom and gloom is out there. If we start to see this thing come back, either if you're bearish, just stay out of the way, or if you're bullish, there's an opportunity there. So it's kind of hard to kind of mute the noise here with all kind of things building going into the beginning of what's just basically a month. And it is too early to tell. But for what today was, it really wasn't that bad, and it really wasn't that good. It just kind of a sideways day. So let's take a look at the heat maps here. More of the same. Nvidia down about 2%. Amazon's down. Meta, Google, Apple, Microsoft. All those darlings are slipping a little bit, but there's some bright lights in here. Merck off the bottom. One of the trades that I saw out of the communications, a good bounce up. We'll share that with you. But Boeing's up a little bit. T-Mobile with a good little surge there. So it's kind of pick and choose. I'm still seeing a whole lot of piecemealing going on. Lots of stocks kind of coming off the bottom. Are they being purchased because of discounts? They're cheaper, maybe. But a lot of the stuff is still being taxed at the top. Now, that being said, folks, go ahead and take a look at some of these larger guys, Amazon, Nvidia, some of those stocks today. They traded off of their bottoms for the morning. So it's not like they were really beat down. Just a little bit of attacks, and it seemed to kind of subside throughout the day. I don't know what's going to happen tomorrow, but at least the gap down today kind of fizzled itself out. So where does that leave us? Well, I'm just going to stay still, we're still bullish. I mean, we really didn't change that trend at all. I showed you this hammer candle isn't enough for me to say, okay, I'm going to go from a +3 down to a -1. I did drop it to a +2 only because it's slightly, and I put at the 20-day, it's slightly below it. But, if you draw like a little bit of a slope there, it's still slightly up there. Now, tomorrow we could roll right down, a big red candle, we're falling apart, and that's great. Then we can flip it over. But right now, it's not enough for me to abandon bulls and load up on bears. So we'll have to see where this goes. But I did want to slide this to a 0. I could have kept this easily to +1 here for the week. Sorry, I don't mean to exit out, but +1 for the week, because that is just a pullback with a beautiful hammer candle. It doesn't mean a hill of beans until it confirms. So I decided, hey, let's just keep it at a 0. It's too early for me to throw out a bunch of bulls and a bunch of bears today. However, we can start planning for 1 or 2 of each, just in case we get the follow-through that we're looking for. So what do I have for you? Well, I've got a couple of bulls. I got a sideways and a bear. I got FOXA in there. Dino, it's a good breakout. They're moving higher. Communications, we've got energy here. Potential neutrals. JCI, Roblox is one that's been bouncing around, but I put an asterisk on Roblox, and we'll talk about that in a second for kind of a sideways to potential up. CAVA, UPS, WY, ONON, I mean, they're looking really good. We'll take a look at CAVA. It's a restaurant. So let's get started with a bull here. This is FOXA. It struggled for a bit. It was pretty strong a while ago. It had a pretty good move off the bottom here into the May, and then it had this nice consolidation. I actually saw a head fake here, but it just stayed. I thought for sure this was going to retrace, and it never did. It's a volatile stock, and this is a little bit more of a reactionary stock. But what I thought was super interesting today was the confirmation of this ascending triangle. It was one of the larger movers. I'm not sure if there was any news attached to it. I haven't gotten that deep. It does look like there was some sort of a news here, and maybe even a dividend paid. So that could have a lot to do with it. But I just like the pattern. I just like the push. It does have a tendency to do this and then kind of retrace. So if you want to play something sideways to up from here, it might be an opportunity. But hey, today's not the day I want to do this. Let's give it a couple of days and see if we can't establish maybe a better pattern. But it is definitely moving in the right direction. Now, what I thought was interesting was my sideways trade, but I kind of had the asterisk because it could be this engulfing candle. And I just like how it set itself up. Now, Roblox has been one of those darlings. It really has. It had some big push and pull when it came to its earnings, but it never really got completely punished. This is a stock that, hey, if it's done, it would be going back down to the 80, 70 level, but it never really even dipped too far below its 50-day moving average. So we had it on the sideways as a group. This actually came from our midweek class. So I decided, hey, let's carry it over. But I like the gap down, and we did see a lot of retracement. Once again, we did close off of the bottoms today in the markets as well as some of the stocks. But I just like how this kind of closed back up in this area. So it's still technically within the range. But if this momentum can carry, and we get a little bit of a fall through, this could be a really nice channel breakout. So I've got that as definitely one on my watch. If it rolls over tomorrow, then I'll keep it on my sideways. But if I get any sort of momentum or recovery of today's gap and this participates, this would be a fun one to play as a breakout. Moving over to the bear side, let's take a look at CAVA. It's restaurants, and this one we talked a little bit about in our classes over the last couple of weeks, actually. And we had this breakdown here and then the gap. And the idea was, is this going to retrace, retest, continue, stay within its channel? And it looked like it was about to break, and it didn't. It looks like it hesitated. But what I like now is we're back down to where it bounced. It's below the channel, and we did set our first lower high from the initial gap. So I like it. The potential has to slide here. Obviously, when you see these little lightning bolts, if you guys are using TradingView, it's kind of nice. It'll show you some of the news that's out. Like, for instance, this is earnings here. This is some sort of announcement specific to the company or something that was mentioned to it. But I just like how it's kind of rolling over and continuing to slide lower. So it could be a pretty decent continuation of a bear trade. Past that, folks, that's pretty much all I got. I always like to keep watch lists and build, but it's difficult for me to take action a day after an extended weekend and after gaps, things like that. So I'm going to give it a day or so. But September did come out of that long weekend with a small move lower. However, it didn't close on the bottoms, and it wasn't a 1%, 2% move. It was slightly, all three of the markets were less than 1%. Focus on the charts and price action for confirmation. We have all sorts of statistics saying September and October are awful. It's the worst. Get out. It could be good. It could be great. We're going to have plenty of news events, right? That hasn't changed since January. I don't think it's going to get any better or worse. Economic numbers that might be off and reacted to. But I always have believed this. If you follow sentiment, if you follow where the dollars go, that's the truth. So just try not to react too quickly to getting in or getting out of anything, and kind of follow the overall motion of the ocean, especially if that volatility comes back in the next little bit. That being said, I have to agree with what we talked about on the weekend class. I don't think that's going to come until a little bit later. We got that ADP employment, jobless claims, services PMI, and then the Friday unemployment. So there's going to be some economic numbers that can really push and pull and create reactions or reasons for whatever. Just be mindful of that, and let's follow what actually does stimulate sentiment versus what just what sentiment just looks over. That'll give us a really good idea of when we can expect some sort of a volatile impact on the markets or just a boring day. So stay with it. Check potential trades for earnings as well. We're kind of on our way out of that. I think that we're looking into the next quarter and kind of where money kind of wants to go here based on where sentiment decides it wants to take it. So be patient. If you've got good trades, let them be good. And let's take our time getting into new ones. All right, folks, that's all I got for you today. Thanks for joining me, and we'll talk to you next time. Bye, everybody.